Hello, Oracles. Well, the market reversed course a little bit today, just basically giving up the gains that it had for the majority of the week. Not a big deal, as we said we're going to be kind of flat going into Friday, anticipating the CPI data. Tesla ended up being green, hence the green shirt, up 1.3%. It was a good day for Tesla. Again, I'm not too super excited about it. Friday is going to be the big day to follow and see what happens there. And now one thing that could move Tesla a little bit tomorrow could be NIO. They have their earnings early tomorrow morning, so judging by what comes out of those earnings and what they have to say, could in turn swing Tesla a little bit. And now NIO was up today about 3.7% in anticipation of their earnings in the morning. So let's see what happens, what comes out of these earnings. If they do well, could bring up Tesla. But sometimes in the past we have seen NIO do well and Tesla come down because people are like, ooh, competition. I'm not concerned either way. Whatever it is, it's going to be a little short-term emotional swing for the stock. So no big deal for me either way, but it's just something to pay attention to. If Tesla happens to move a good amount and you're wondering why, it could be because of NIO's earnings. And now another thing that could potentially move the stock as well is AMD. They have Investor Day tomorrow as well. And now for those of you who don't know, they have the Ryzen processor going into many of the models that Tesla is producing right now, especially coming out of China. So, they may be introducing or talking about something in relation to Tesla at Investor Day. So again, something else that might move the stock a little bit, but again, it's going to be probably a short-term swing with CPI coming on Friday. And now Gary Black on Twitter has been talking about the proxies, thinking between the next 7 to 10 days we should see it. I'd heard on Friday we might see it. I heard, within the first 2 weeks of the month we should see it. So yeah, within the next week we'll see the proxy. That's going to give us more information when it comes to the annual meeting and when it comes to the split. And talking about splits, we've got a lot of splits going on. So Amazon just had their 20-to-1 split. We've got Spotify that announced a 10-to-1 split. Google has their 20-to-1 split coming up at the end of this month, and Tesla. And I think what's happening right now is a lot of these companies are doing a split in anticipation of a potential recession coming. Because if we end up getting a recession, you're not going to want your stock price to be really high. And you don't want to split when you're in the recession because it's already ugly times to begin with. So you kind of want to do it beforehand, that's another reason that's leading me to believe that Tesla is going to split probably end of August before things do get uglier, if they are going to get uglier end of the year, overall economy-wise. And another fear that is getting priced in right now is stagflation. What stagflation is when you're in a recessionary time and you have high inflation and high unemployment. The reason why this is an issue is because the Fed focuses on two things, and they're focusing on keeping employment high and inflation low. And they have the tools in order to do this, which their tools are raising interest rates. But when you have a high unemployment environment, you do not want to raise interest rates because that is in turn going to create higher unemployment. Because when you raise interest rates, it's more expensive for companies to borrow money. When companies have to borrow more money more expensively, that means that they're probably going to have to cut down on expenses somewhere else. Payroll is usually the first thing that goes. So it's a very difficult balance. So if both are high, if you have unemployment high and inflation high, it's very difficult for the Fed to combat that. Currently, we are not in that situation. Currently, we do have unemployment looking very good. We do have, last I had heard, unless things have changed, 1.9 jobs for every one person that is out there. I know at my company itself, we are struggling to find people. My branch, luckily, just finally got fully staffed, but other branches in our company can't even get people to apply to their jobs, let alone to actually show up and hire them. So it's difficult for employers in this job market right now. Now, when we're seeing a bunch of retailers out there talking about high inventory levels, they're going to have to in turn bring down prices. If they bring down prices, that means that their profits are going to be lower. If their profits are going to be lower, that means they're going to need to cut expenses somewhere else. And again, payroll is usually the number one expense that gets cut. So yes, the stagflation is a potential for the future, but looking at where we're at for unemployment and looking at the fact that if prices come down for a bunch of retailers, that might in turn bring inflation down on its own. And if that brings inflation down on its own, then the Fed doesn't have to raise rates as fast or as high to help bring it down, which means that unemployment doesn't need to go up with higher interest rates. So again, this is still the fine balance that the Fed is working on. And, leave your comments down below. Let me know how you feel about the Fed, because I know a lot of it comes down to the confidence you have in the Fed's ability to actually make this happen. And some people are looking back saying, well, the Fed was pretty stupid in the first place to, go with quantitative easing as much as they did, as fast as they did, and then not doing anything about it for as long as they did to kind of retrace their steps. So again, hindsight's 2020. You have to kind of put yourself back in those shoes and say, well, what should we do in this moment as the Fed? So again, we can't change the decision. Their decisions are what they were back then. But going forward, a lot of this comes down to, do you think the Fed has the ability to give us this softish landing that they are talking about? Seems like some things might naturally work themselves out, and if the Fed is lucky, that might happen, and their softish landing might not be all because of them, it might just be because of the natural course of things. But if we can pull that off, we can avoid stagflation, which is a great thing because stagflation is actually worse than inflation. And the only thing worse than stagflation is a wage price spiral, and that's where wages keep going up, but prices of everything else keep going up, and it just keeps going up and up and up and up and up, and you never ever stop it, and then your monetary policy is garbage, and the dollar is going to be completely worthless in the future. So that's way worse than stagflation. But as it looks like right now, unless we get something that really turns us in the wrong direction, we should be moving probably towards a recession, but a necessary recession. And when I say necessary recession, again, every 10 years or so, you kind of need to do like a clean sweep of what's going on. It's very painful. It sucks to go through. You think back to the dot-com bubble and the housing market crash. Nobody enjoyed those times whatsoever. But if you were wise with your money and invested during those times, you came out loving them. So this is going to be another one of those times. It could last anywhere from another 6 months to 2 years. This could go on. And it's going to be a matter of cleaning out a lot of the dead weight. A lot of these companies that shouldn't be companies anymore, they're going to end up going bankrupt. And when you're looking at Tesla in particular, I've talked about it before and how Tesla's going to thrive coming out of this either way. But with a recession and a good cleaning like we could potentially be getting, Tesla's actually going to come out stronger. So yes, we are going to have to endure the pain of the next, year or so to get through this, but coming out of it, it's going to be even better than if we don't go through it. So this is just, a potential possibility. I'm not trying to be negative. I'm just being realistic as to what could happen. And quite honestly, I think it's a good thing. I think we should be going through this. I think we need to have these times, because if we don't, then there's just so much other dead weight in the cogs that are clogging things up that really shouldn't be there. And so if we can get this clean slate and come out of this, Tesla's going to do so much better. And I don't know how much lower we're going to go. Don't have a crystal ball, but whatever we're going to do, my dollar cost averaging through this is going to help me keep my cost basis low. And as soon as we see that turn in the market, which is usually when the Fed reverses course, that is the key time to buy. So if you just be patient, do your thing. I know we talked about it on here already about, different strategies that you guys have. So patience is going to be key. Be patient. Just brace yourselves for what could potentially be very rough times for quite a while. And I gotta tell you, painful times feel like they last a lot longer than they really are. Because most likely what's going to happen is if we get this recession for maybe 2 years, and don't forget, we're already 6 months into this potential recession. But if we get it for 2 years, 2 years in a recessionary bear market feels like the same length of time as 10 years in a bull market. It's just how it is. When times are good, time flies. When times are painful, time slows down. So just take a deep breath, look at this, take your emotions out of it and say, all right, what's the worst case scenario? What can I do to get myself through this if we end up getting into those times? So enough of the doom and gloom, but that's just my outtake on this. But again, looking at the market right now, stagflation is one of the fears that people are talking about. And so I wanted to educate you guys, if you did not know, as to what stagflation was, just to kind of monitor this. And if you hear it, now you'll know what they're talking about. Let me know in the comments below, how do you feel about the Fed and their ability to give us a softish landing? Do you think we are going to get stagflation? Do you think we are going to get a wage price spiral? Or do you think the Fed and natural course of events are going to bring inflation down where we get a recession but not stagflation? Or maybe the Fed can actually pull off a softish landing and we get no recession at all. Let me know your thoughts in the comments on this. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat that is down in the description, and I am over on Patreon if you'd like to support the channel further. Thank you so much. Have a great one.